Hello, it's Robert Miner with Dynamic Traders Group, and it's February 1st, about 2 o'clock when I've made this recording. I'm doing a follow-up or a part 2 to the Trade Strategies tutorial video that I did yesterday for our DT Report subscribers. I do these Trade Strategies videos every week, sometimes twice a week like I've done this week, and that's beside the regular written report and the daily updates and the DT reports, video updates that we do twice a week, which are separate from these trade tutorial educational videos. I'm doing this part 2 as a follow-up to the trade setups that we looked at in yesterday's video. That video is also available on YouTube. It was put up January 31st, just yesterday. It's also available at dynamictraders.com at on our website at the Traders News section. Typically, we don't make these videos available to the public, to the non-paid subscribers to our DT reports, but this week we're doing that, putting up the full video for non-subscribers to take a look at. We just like to get the word out about our service and our reports and the great educational, ongoing education that we give our subscribers for very minimal cost. For less than $100 for 3 months, not 1 month, for 3 months. You get these videos every week, and as well as our regular written reports and our other video updates that we do besides the trade tutorials. So if you like what you hear, check us out at dynamictraders.com. Again, this is the first time in maybe forever that I've provided the full videos that we've done for subscribers in 1 week for the non-subscribing public. So I hope you like it. And before we get started, got something else I want you to check out. I've been teaching traders for over 30 years, since the mid-'80s, and I just wanted to let you know I do actually trade. This is just the past year with this Robbins trading contest is on the index and futures. This is the 6-month trader contest they had. I won first place with an 86.5% return. On the year-long Forex trading, I was third place with a 70.4% return. That's pretty good showing. I'm pretty happy with that, but it shows you that I'm trading a wide variety of markets, and I'm making, this is real money, real trades over the year. Actually, all the way back to 1993, I won first place in the Robbins Trading Contest, futures contest, in the non-professional division. It doesn't show on their website because at that time there were 2 different contests, and only the one with the higher return, which happened to be the professional division, is on their website. But I was first place back in 1993. I got that very cool Bull and Bear trophy from 25 years ago. Here this year, I'm doing this Forex contest again. I'm in 5th place at the end of the first month, 2.6%. Nothing to shout about, but you know, I'm still hanging in there. Knocking off a little bit of a gain here for the past month. You can check any of these standings out at worldcupchampionships.com/standings. And I've used Robbins as a broker on and off for over 25 years. And they've always been right by me. Their costs are reasonable. And you might want to check them out as your brokerage as well. This is the ES in 60-minute data. We looked at 60-minute chart yesterday as we zoomed into a specific trade strategy. And this is the data as of the end of the day yesterday, or near the end of the day. I think it was about 3 or 3:30 on Thursday afternoon. And we're looking at this as, let me go just to the little higher time frame. First is 240-minute. We were looking at a probable end of the 5-wave advance, of a 5-wave advance off the December low, and that we were near the end of that advance, and that we had reached the ideal price target as of yesterday's high, right about here. And there were some time factors. One of the time factors was just the simple low to high on yesterday afternoon. So everything was kind of together to be in a position to have completed the advance off the December low. And here's 60-minute data. So the trade strategy was, since at the end of the day, this is what it looked like. It looked like wave 5 was subdividing nicely into 5 waves. So this swing low, which would have been the low of yesterday, I just drew a line across it. I set an alert on it, and I said my trade strategy would be, if the market declined below that low, that would break the bullish pattern. It'd be what I call pattern reversal signal, and it would be an immediate setup for a long trade if that should occur. And if the market should go higher, we just kind of adjust our entry and where our initial protective stop would be. Because if it went higher, there's nothing changing the higher time frame position, that the weekly momentums were dual look back overbought, that the daily momentum was not quite overbought, but we're in the ideal end of wave 5 price target zone, etc. Let me just add some data on here, get us up to date. Of course, we didn't take out yesterday's low today. Right here where I've got my cursor, that's the 9 o'clock bar. So the active session hasn't even opened by then. They had released the employment report, however. That's why we got some activity on that first bar. And then here we are the rest of the day. We're up 3 bars, and now we've been sideways to down 4 bars. So we did make a slight new high, and you can see that because we've done that, let me just get rid of those. I've actually added, said, well, this obviously wasn't a 3 and a 4 because today we made a new high. So I'm just going to look at this as a 3 and a 4. And if that's the case, I did the 127, 162% external retracements. The 162 is above the market a bit, or above today's high at least, and just a few points above the higher time frame 162 external retracement. So again, boy, everything has come together and is still together to have completed a major weekly trend up from the December low. Once we take out a swing low and we complete this last section up from the January 28th low. So it's pretty significant. And some may say, well, you keep changing that Elliott wave count. Well, it was a good enough count as of this point, 1, 2, 3, and a probable 4, but we made a new high, and we didn't take out this low, and we made an ABC correction, a new high, so we got no choice. So we got to look at it and say, boy, if we're at the end of this series, then any corrective decline followed by a new high could be the last correction. In other words, a wave 4. Actually, I think this fits together a little bit better. We got a 1, a 2, 1, 2, 3, 4, 5. That's a 3. Here's a 4. It even fits together better. So we're about, it's only 2 o'clock, so we got a couple hours left of trading today. But as of now, if the ES declines below today's low at 26.9625 without having first traded above today's high, that's an all-out sell signal as far as I'm concerned. I'm going to do a short position, and let's just say we have not traded above this high. Before we do that, the stop would be above this high, which is at let's just see where that's at. 27.16. So boy, that's going to be very, very minimal capital exposure for the potential that we're entering, not just on what we call a daily high with a daily trend 3 to 5 days sideways to down. This is our weekly data, but potentially a weekly trend that'll be 3 to 5 weeks sideways to down, because our weekly momentums are dual look back overbought, and more than likely at the end of today, the 8's going to make a bear reversal for a dual look back bear reversal. That's a pretty strong signal, especially when it's coming from the 78.6% retracement, happens to be this trend line. And then we've got the 100% alternate time projection this week. So I won't go over the other time factors and some of the more detail on the price factors that was in yesterday's update. But I'm looking at this up here. I'm at the 15-minute data now. Take out today's low. Want to get short straight away. Very acceptable capital exposure on that. And if it does take out today's low, we will have closed lower. We will have traded slightly higher. We've got a new high today. And I don't know why this says the 4th. I must have. There we go. It should be the 1st. We traded slightly higher today than we were yesterday by a couple points. And we will probably close. Well, I don't know if we're going to close below yesterday's close or not, but if we take out today's low, I suspect we're going to close lower. And even though the daily momentum has not made a bear reversal, not overbought, on the strength of this pattern position, as I mentioned yesterday, up from the December low and then up from this wave 4 low January 28th, I'm gonna enter a short trade. So that's what I'm looking at here. Let's take a look at the euro was another one we're looking at for a potential immediate position. Let's take a look at it. Well, here's the Euro 60-minute data, and this is about where we were yesterday afternoon. And when I did the part one of this trade strategies video, and we're looking at probably yesterday's high had probably completed a wave 2 or B corrective advance, potentially an A, B, and a C. And we went over the time factors, the price factors, and all that sort of stuff. And here we were as of the end of the day. As I explained yesterday, I missed the ideal setup was when yesterday morning it took out what I got labeled as this little wave 4C low. That would have been the ideal setup. I didn't take it. So what I'm looking for, because this is more than likely a daily high and potentially a weekly high, a lot of potential downside on this, and I want to get in that in the early stages preferably, is that if the euro made any sort of correction during today, and we got the 60-minute momentum, ideally got overbought, made a bear reversal. If it did that by this morning, it would be set up to develop a very specific trade strategy with a stop no higher than above the swing high that was made yesterday afternoon. Well, let's add some data on here and see where we're at. And again, now I'm going to be looking at data. It's right as of now. This is about 2:15 in the afternoon. 60-minute data. Let me just get it like so. And of course, we traded well into the range of what I got labeled a wave A. That's an overlap, indicates that more than likely this is a correction, and because it's in the nice price and time relationships to complete an ABC correction, which would be a probable wave 2 or B, it'll only be confirmed once we trade below the January 30th low. That's wave B low. But we've got initial confirmation, and again, it's just all the technical factors say get short. So here we are as of today, and we've got this low that was made overnight. Let me just put that in like so, and put that in like so. There we go. So we definitely want to, well, here, first of all, here's some other things. I took these off the chart just to clarify everything. This is probably fairly nicely what we probably got done here. And I think I got that in the 240-minute data. I don't have it on the 60. Probably complete a nice 5-wave one. Where are we at? Just retracement-wise, I won't do anything but retracements. Came right up today to the 62% retracement. And in a perfect position to have completed a wave 2. So what does the market have to do to enter? To go short in this trade. No, really, I want to stick with the 60-minute data. So let's take a look here. And what I was going to talk about was, look at these two really wide range bars. Do they constitute swing lows or don't they? And swing lows to where we would want to enter a trade if we took them out. Well, I'm always leery of single wide range bars. They're usually news event bars, and I usually ignore those when we're looking at the technical position of a market. And this is the bar that ends at 9 o'clock today, and there's that employment report about 8:30. So that's a result of the employment report. And this is just the 11 o'clock bar. I don't know, maybe that's an aftermath of the employment report. Maybe somebody commented on it. But see, it took a dive down and then up. I ignore those bars such as for swing lows. And here's what I usually do when we have bars like that. I hit the C key to look at closes, and I look at the closes and I see, you know, those bars really didn't change the trend of the market. Those bars themselves, they're really not significant highs or lows. So let me go back to putting the bars on. So as of this point in time, we still need to take out this overnight low to confirm that this correction is complete and the trend is likely to continue lower. Now, it looks like, let's just say it continued lower straight away and took it out before the end of the day today. We got a couple more hours almost of trading. But if it did that, we'd have a fairly wide stop. a fairly wide stop? Well, you just trade with a smaller position, and of course, as I mentioned yesterday, this is also if this occurs, it'll go long the dollar setup where we can use ETFs that are unleveraged or minimal leverage, so we can have the stop is not a big deal. So we haven't entered either the trades of the two we're looking at anyway of ES or the euro as of yet, but it's still, we have the basic same trade strategy. Nothing's changed. It's just the entry levels and where the stop levels are going to be are a little bit different than we're looking at yesterday. But at some point in time, probably if not by the end of the day today, at some point in time, we're going to take out this swing low. And as long as we do that without having traded above this swing high, and given that the daily momentums have already made a dual look back bear reversal and the weekly momentums are already bearish, that boy, what a setup this is going to be on the short side. But we got to let the market take us into the trade. It's the same with the S&P. Traded a little bit higher today. It's hesitating at that high. Now we have an entry signal much closer to the market. So I think they're going to be fantastic setups if not elected today. In the next hour and a half or so of trading, then more than likely we're going to see them get triggered early next week. Thanks again for checking out this video. Again, be sure, and if you haven't listened to part 1 of this series, it was posted January 31st on YouTube, as well as in the Traders News on our website at dynamictraders.com. This is the first time I put these videos available for the public like this. Usually when we have public videos on YouTube, they're very abbreviated portions of a video that we've done, and not the full video. But again, if you like what you heard, what you learned, check us out at dynamictraders.com. Take care.